Hello and welcome back to the channel. Today we're diving deep into a market that's shining brighter than ever, silver. What's happening there is creating a perfect storm of soaring demand and shrinking supply, and it's sending shockwaves across the globe. So is silver the new gold? Let's break it down. For months, the Shanghai silver market has been on fire. This isn't a small gap we're talking about. At times it's been a significant double-digit percentage. This tells us one crucial thing. The demand within China is absolutely voracious. Traders and investors are scrambling to get their hands on physical silver, so much so that they're willing to pay a hefty premium for it. This isn't just paper trading. This is a clear signal of a physical squeeze. Why the sudden rush? A big part of the story is the retail investor. We've seen a massive influx of individual buyers in China pouring their savings into silver. You see videos online of people lining up buying silver bars and coins as a safe haven. With uncertainty in the property market and a fluctuating stock market, many are turning to precious metals as a more reliable store of value. It's a cultural shift as much as a financial one. But here's where it gets even more interesting. This isn't just about investment. Silver is a critical industrial metal, and its role in the green energy revolution cannot be overstated. China is the world's leader in solar panel production, and guess what's a key component in every single one of those panels? Every new panel that rolls off the production line consumes more silver, putting relentless pressure on an already tight supply. Its unique properties as the most conductive metal make it irreplaceable in countless high-tech applications. As China aims to be a global leader in these fields, its industrial appetite for silver will only grow. This dual demand, from both investors seeking a safe haven and industries building the future, is creating a powerful engine driving prices higher. For a long time, China was a net exporter of silver. They produced more than they needed and sold the surplus to the rest of the world. But that has completely flipped. Over the past few years, China has become a significant net importer of silver. Their domestic production can no longer keep up with their ravenous demand. This is a fundamental shift in the global market dynamic. The country that was once a source of supply is now a major competitor for it. The situation is even more critical when you look at global mine production. For years, output has been relatively flat or even declining. Finding new, high-grade silver deposits is becoming harder and more expensive. If a major copper mine scales back production, the world's silver supply takes a hit too. This inherent inelasticity means we can't just flip a switch and produce more silver when demand spikes. Adding to the pressure are the dwindling stockpiles. Major exchanges like the London Bullion Market Association and the COMEX in New York have seen their registered silver inventories decline dramatically. The silver that's supposed to be readily available to meet market demand is being drawn down at an alarming rate. And shrinking inventories. You start to see the makings of a serious supply crunch. The available silver pie is getting smaller just as the biggest player at the table is demanding a larger slice. So, what does this all mean for the future of silver prices? Many analysts believe we are at the very beginning of a long-term structural bull market for silver. The use of silver in technology is only going to increase. And the desire for hard assets as a hedge against inflation and economic uncertainty is a timeless theme. Unlike gold, which is primarily a monetary metal sitting in vaults, silver gets consumed. This constant consumption permanently removes supply from the market, making the supply-demand imbalance even more acute over time. We also have to consider the gold-to-silver ratio. This is a classic metric that traders use to gauge the relative value of the two metals. This suggests that, relative to gold, silver is still significantly undervalued. If that ratio were to revert to its historical average, it would imply a much, much higher silver price, even if gold's price stayed exactly where it is today. The story unfolding in China is the catalyst, the spark that has lit the fuse on the silver market. The premium in Shanghai is a flashing red light for the rest of the world, signaling that a physical shortage is no longer a distant possibility, but a present reality. This isn't just a story for seasoned commodity traders. It has implications for everyone. For investors, it presents a compelling opportunity in a world of volatile assets. For industry, it signals potential cost increases and supply chain challenges ahead. And for the global economy, it underscores the critical role that raw materials play in the technologies that are shaping our future. The silver story is complex, with moving parts all over the globe, but the epicenter right now is clearly in the East. The combination of massive industrial consumption, a booming retail investment culture, and a fundamental shift from net exporter to net importer makes China the driver of this market. The squeeze is on, and it's a phenomenon that will likely define the silver market for years to come. Keep a close eye on this space. It's about to get very interesting. Thanks so much for watching. What are your thoughts on the silver market? Do you think we're heading for a major price breakout? Let me know in the comments below. And if you found this video insightful, please hit that like button and subscribe for more deep dives into the markets. See you next time.